everybody. Vanakkam. I think rhythm has made my job easy. We have been listening to him for the last almost 30 years. When I used to be part of the investment, I used to listen to rhythm. Even today, we continue to listen to him. He's one big bull in the market. Whether ROA is 12%, he will be bullish. ROA is 26%, he will be bullish. Which is nothing but India bullishness. But what you are seeing today is a bullishness only, right? I think what you are saying today is bullishness. I have few slides. Of course, I'll run these slides. I think he mentioned about, Jan Dhan Yojana. I think one or two interesting that he mentioned, which is about inequality changing and how the Jan Dhan Yojana, which is basically the account opening, helped the country. That number I still remember when it was announced. Most of us operating the business, we always look at what is the cost of opening an account. Even today, we still the cost of opening KFC 20 rupees, 30 rupees, 40 rupees. Sometimes we say acquisition cost is 1,000 rupees. But all of them actually pay in the long run how much it can add to the total value of the kitty. And the Jan Dhan Yojana one account, I still remember one of the public statements which came from one of the public sector bank. They're just opening it because there is a push from the government of India, therefore we are opening it. Cost versus the balance that I'm going to get, I think it's not going to actually sufficiently compensate for me. That was the statement which was made by somebody at that point of time. I don't name the person. Today, you will not believe the same account, Jan Dhan Yojana account, has got about 2 lakh crore number that is lying in the bank account, earning about 2.5% for the depositors, and earning roughly about 11% of the bank. Because 2.5% they pay, they lend at 11%, right? 11 or 12%. So that is the power of these things. Therefore, the inequality, how it got changed. Second is, I call it as a firing of all cylinders. In the last 1 year, I have been a firm believer that India is actually firing from all cylinders. What do I mean by that? I think he mentioned about various things that has gone well as far as the country concerns. So every moving parts of the economy, which is the economic driver, which is nothing but, I put it into 4 buckets. One is the sufficient investment that we make in building infrastructure sufficient in the country. I think if you look at every day, the Prime Minister of the country is announcing big capex project, not even coming from private sectors. As I come here, our chairman has completed 15,000 crores of capex yesterday. It will become second largest pine company in the country, next to Asian Paints. They completed the entire thing in about just a matter of 1.5 years. So they launched it yesterday. These are one of the biggest announcements made by the private sector in the last few years. But if you look at government of India has been the largest spender on infrastructure, which is building the future. I'll also come to you why it is important. Second is the digital infrastructure. I think the big thing that has happened is the digital infrastructures. I think he talked about the QR code and UPI, all of them actually digital infrastructure, which is going to make India completely integrated from a data point of view. I think it's going to completely remove urban city versus rural economy, urban economy, all completely taken away, which essentially means whole Bharat getting integrated through the digital economy. This is a big thing that has happened. The third, which of course has happened, is the manufacturing. I think today manufacturing is one. I think stock market. I think he didn't give the number. He throws the number all the time. But I'll give you one number. In the year 2009, the market cap, total market cap, if you take, 80% of the market cap was coming from Nifty 50 stocks. Nifty 50 stocks used to contribute about 80% of the market cap in the 2009. Today, the same number, if you look at it, 50% of market cap of our Sensex, our market, country, is coming from the Nifty 50. That means 50% of the market cap is coming from rest of Nifty 50. Which is again a big change, which essentially is coming from the fact that the ecosystem that got built, whether it is infrastructure, railway investment, all of them actually create almost about 250 industries to prosper. I was in Tanjore about a month back. So I had a rural tour. I'm running a series at Aditya Birla Mutual Fund, Bharat series. I got a Bharat series, taking route to the rural. So rural is the root of the economy, right? So I actually put a concept called route to the rural. So I went to my village and said, let me do a complete 3 days of shooting. So there is a company which is about 100 crores turnover company making the windmills and tower for companies who are actually operating out of Delhi. Where is Delhi? Where is Tanjavur? Get an order, right? So that is the way I think the manufacturing industry, I think, has picked up. So the whole ecosystem, social, the whole ecosystem of the economy has picked up very, very strongly. That's something I just want to highlight. The last but not the least, which is of course essential for all of us, the social infrastructure, which again he talked about the direct benefit transfer. Social infrastructure has ensured money reaches the hands of people. Therefore, the per capita income has been rising in the country. Per capita income has been rising in the country. So all put together, if you look at, I think we are actually as a country firing from all cylinders. Every sector, if you look at it, the very few sectors will probably say, people will say, I'm not doing well, which is nothing but the spending pattern has changed from buying a clothes versus spending money on entertainment. That's completely changed. These are some of the areas I think we probably see some bit of negativism, but otherwise every center of the economy is firing. That is one of the reasons we are actually seeing the market moving up quite substantially. This is something I talk about, per capita income is rising. So per capita is rising, I think in my view will go to almost about 3 or 4 times. Per capita will increase, which essentially means for all of us sitting in the room, there is going to be a big opportunity to actually get the financial savings into the capital market. Second point is actually the market capitalization GDP ratio. I think he talked about Japan and talked about US. There is one measurement that we always take is actually how the market cap moves aligned with the GDP. Whatever said and done, currently I think India is getting into the path of becoming a $10 trillion economy, which essentially means, I think what Rhythm mentioned about 20%, if there is a earning growth comes in, the market also has to accordingly reflect in terms of their market cap discovery. There are a number of companies that add to the market cap last few years. As I mentioned, about 50% of the market coming from 50 companies, the rest of the coming from the rest of the companies. The number of companies would have added from the startup companies. Startup companies added to total market cap is close to about 7 lakh crore. The one segment of the market has added a significant market cap is some of the government of India company. Public sector enterprise added close to about 10 lakh crore market cap. So therefore, the market cap is discovering, from a money making point of view, what is most important is actually the market cap has to keep on rising, therefore you actually get your compounding right. This is something where we are today. Just imagine this number as to, of course, I'll come to the next slide. I think he also mentioned about, I just took the cycle of market, how the market cycles moves. I think if you see this slide, I have taken from 2001 to 2024. Volatility is bound to be there, we can't ignore it. But volatility, despite being there, every 3 years the market gives you a higher level and lower bottom. This is the way I think market always behaves. If you look at this chart, every time the market moves, today we are in a completely upside territory, but does not mean that I think market will remain the same as forever. Therefore, we have to also accept the fact market will turn volatile. When super bullishness is there, we have to be, of course, careful about the volatility will set in. That does not mean that market will, despite all the volatility period, what will remain constant is actually the upward graph. So keeping this in mind, the sectors gets rotated. Also, again, you have to remember, I think sometimes one sector will do very well, some other sector will do very well. I think he talked about AI will disrupt. There is somebody actually made a statement in US today. AI will become a separate industry by itself. It's like how semiconductor industry is becoming a separate industry itself today. And AI, he says, will become a separate industry itself, which essentially means that will make about $1 trillion market cap. But traditional software makers will create actually go down in value. Therefore, sector rotation, I think will continue to remain. It again moves from segment to segment. Therefore, also should be kept in mind. Therefore, chasing returns need to be one has to be very careful. Sector rotation, one has to understand, which of course job of money manager makes it easy and difficult. But at the same time, from your allocation point of view, I think you are definitely keep this in mind. And the whole thing that's what's most important is the power of systematic. Of course, I don't need to tell. All of you actually discovered it. In fact, I still remember at 2016, when I was AMFI chairman, I introduced mutual funds IA along with some of my committee members. And when I did that, the idea was making mutual funds IA as a brand. We must move away from mutual fund subject to market risk. What is that will supersede that? Something I think supersede for something to become worse, right? Otherwise it will not happen. So I think Karan was also there that time in our committee, right? Then we discovered mutual funds IA, the moment you say mutual funds IA, Mutual funds subject to market risk will remain, but they become inferior to mutual funds IA. That's the way I think you can overcome that. Nothing has changed. They not changed anything. Everything remains the same. Same disclosure. Nothing has changed. But mutual funds IA become powerful. Today, across languages is being used. That's done wonders. I think it will continue to remain. So, which is a fundamental change. Of course, sometimes I just put some of our funds, how they have delivered in terms of return over a period of time. This again is the power of compounding actually continues. What is most important here is we are moving to the $10 trillion economy. I just put some kind of numbers. As is known fact, none of us sitting in the room would have predicted 70,000 index would come. I'm sure none of us would have predicted that. But all of us would expect something will happen, market will continue to rise. I just put some kind of simple number. $4.5 trillion economy and $4.5 trillion market cap. Index is at 73,000 index, next Sensex. Just simple number you put, assuming this become $10 trillion economy, the next say 5 years, $10 trillion market cap, assuming it's not 125% over market cap, 125% over GDP, I am taking simple 100% over GDP, then the 73,000 index should be, ideally speaking, should be about 1,70,000 number. So is it a difficult number to digest? It's a difficult number to digest. Can it happen? It can happen. That 70,000 index, was it actually part of our expectations? Absolutely no. What is most important is actually in the investing world, and especially in the mutual fund world, is actually optimism. The way that you have been pushing your investors to buy at all point of time through the SIPs to create a power of compounding. Second, which will happen from your point of view, from a distributor's point of view, and from a mutual fund point of view, there is a high probability. I think you mentioned about 401k plan. I think there is two, three things in my view will happen. NPS is a growing asset class, whether you like it or not. NPS is growing. NPS does allocate roughly about 20 to 50% in equity. That money will become permanent money. EPFO today invest up to 15% in equity. My own belief is the next decade, probably the number will go to about 25%. That will become another stabilizer to the equity market. All of us, countries like Canada, invest about 40% of the social investing into the equity market. Okay, they are worried about pension. They earn 4% in your fixed income. They have to pay a pension about 7.5%. Where will you fund the gap? It has to be funded through equity. India also, if you look at today, the money that you make in EPFO versus what you promise, 8.4 you promise, what you earn about 7.1% your 10-year bond yields, where is the gap will be funded? It has to come from equity. Therefore, my gut feeling is EPFO also will increase the limit over a period of time. And the last but not the least, in my view, there will be more MFDs. One of my vision that I had, that we should have 5 lakh MFDs. People always used to ask how. My belief is that the answer for how will come maybe the next 1 year, where the banking system will probably say that I need more deposits. I don't need wealth management business for me. But that is too small. The income that I make out of wealth management, selling insurance product, vis-a-vis the interest income I'm going to make is going to be substantially, huge difference will be there. There's high probability. The banking system may say that I have to reduce my wealth management business in order to get more liability and asset business. Therefore, I can make more NIMs of 3%, more sustainable rather than fee income. If this comes, then what will happen? The entire banking system assets is going to be accessible to you as a MFD advisors or RA advisors or the distributors. At that point, in my view, can also become very large component for growing a business. Therefore, don't underestimate your own business. Don't underestimate mutual funds. Will not only become 100 lakh crore size. Aditya Birla mutual fund, as I speak, we are in a 30th year of celebration. We have seen up cycles. We have seen down cycles. We have seen people coming and going. Brand continues to go strong. This will go for next 10 years or 15 years or 20 years, multiple decades. I think your business also will become a similar way in the long run. Let me just end with a small video for our partner we have created. It is in Tamil. Those are non-Tamil, please excuse me on this.
அப்புறமா ஃபோன் பேசிக்கலாம். முதல்ல சாப்பிடுங்க.
ஒரு 2 நிமிஷம் வெயிட் பண்ணு ப்ளீஸ். வணக்கம் அகர்வால் சார், சொல்லுங்க. நல்லா இருக்கேன் சார், நீங்க எப்படி இருக்கீங்க? ஒரு மணிக்கா? ஷூர். ஓகே சார். சரிங்க சார். வாச்சலோ. வாங்க. இன்னைக்கு டிஃபன் யார் கூட ஷேர் பண்ண போறேன்? சிவாவோட. சொல்லுங்க சார்.
என்னாச்சு? எல்லாம் ஓகே தானே?
அகர்வால் சார் கூப்பிட்டுருந்தாரு. 2 வாட்டி ரிமைண்ட் பண்ணாரு. அதான் போர்ட்ஃபோலியோ செக் பண்ணேன். கொஞ்சம் எஷோர் ஆட் பண்ணிருக்கியா ப்ளீஸ்? அதுக்குள்ள நான் குடிச்சிட்டு வந்துடுறேன். வணக்கம் சார்.
வாங்க அடி சார், வாங்க வாங்க. சொன்ன நேரத்துக்கு ஷார்ப்பா வந்துட்டீங்க. சரியா 1 மணிக்கு.
ப்ளீஸ் இல்லை சார், நீங்கள் எனக்கு 2 வாட்டி கால் பண்ணி ரிமைண்ட் பண்ணீங்களா? அதான் ஏதோ அர்ஜென்ட் நினச்சி நான் இங்கே கோலோட பர்த்டேவா இன்னைக்கு?
அப்படி நீங்க கோலோட பிறந்த நாள் நினைச்சிருக்க. பிரியா அனில் சார், கடந்த 10 வருஷமா நீங்க கொடுத்த மியூச்சுவல் ஃபண்ட் அட்வைஸ் தான் ஃபாலோ பண்ணிட்டு வரோம். அப்படிதான் இந்த வீட்டையே வாங்கிச்சு. இன்னைக்கு வீடு வாங்கி 1 வருஷம் நீங்க தான் நான் எப்படி செலிப்ரேட் பண்ணுறேன். அனில் சார், இப்போ நம்ம ஒரு ஃபியூச்சரை சேர்ந்து உங்களின் ஒவ்வொரு கனவிலும் ஒரு பங்கெடுப்பதின் மூலம் அவர்கள் உங்கள் குடும்பத்தின் ஒரு அங்கமாகிறார்கள்.
So you are serving the nation. So you are creating wealth for your investors. So this is a proud moment for all of you to feel proud. Yeah.